this was the first year, second year, this was the 13th year, we can just put 14 in this formula, or 15 or 16 or 17, and then the valuation based on time is known. Same for stock to flow. We know the halving is in 2024. We know what the stock to flow ratio will do. It will double from today's stock to flow ratio. And we can plug that into the model and derive a value. So only those two models can be extrapolated. And you can see that this is exactly where I got my 100K to a 1 million Bitcoin range from that I predict in the next halving cycle.
Bitcoin, the world's first and most well-known cryptocurrency, has attracted the attention of investors and enthusiasts alike because to its massive price volatility and potential for big returns. In the middle of this fascination, Plan B, a well-known crypto celebrity, has received prominence for linguistic analysis of Bitcoin value models. Plan B dives into the 4 valuation models and explores their pros, disadvantages, and potential consequences for projecting Bitcoin's future price in his latest video. Plan B presents 4 Bitcoin valuation models: the time model, the stock-to-flow model, the difficulty model, and the UTSO model. Each of these models considers different elements to estimate the value of Bitcoin over time. According to Plan B, the time model, which is depicted by a light blue line, approximates adoption over time. The reasoning behind this concept is that as acceptance grows, so does the price of Bitcoin. The stock-to-flow model, displayed as a dark blue line, evaluates scarcity by analyzing the stock-to-flow ratio of Bitcoin. As scarcity grows, the Bitcoin price is projected to climb. The red difficulty model tracks the network power of the Bitcoin network, demonstrating that the more the network power, the higher the price of Bitcoin. Finally, the UTSO model is depicted as a green line. This model evaluates the distribution of Bitcoin over UTSO, unspent transaction outputs. The price of Bitcoin rises as distribution expands. Let us now go on to the video, where Plan B employs these models to forecast a potential range of $100,000 to $1 million for Bitcoin during the next halving cycle. As you watch, please like the video, subscribe, and leave comments.
Are those models really? We could look at the goodness of fit, R squared, which is 97% for the time model, stock to flow model, and the UTXO model, and it's 94% for the difficulty model. But then R squared doesn't say anything, and I guess the very important thing to remember is correlation between those 4 factors and the Bitcoin price is not causation. The relation can be spurious, it can be incorrect. So you should always remember that. And also, I mean, those are very simple models based on 1 factor, so you can't expect those models to be 100% correct. 94 and 97% is actually quite good. And 100% would be impossible with these very simple models based on 1 variable. Some people even say that models are invalid and useless because variable X, Y, or Z is not in there. Like, okay, a demand is not in there, so the model is not useful. Or the dollar M2 money supply is not in there, so the models are not useful. That is not true. That's not true at all. I mean, yes, a lot of factors influence the price, not only those 4 factors. You have all the macro factors like the Fed and the inflation and interest rates and the money supply of the dollar. You have the SEC with their ETF approvals. You have exchanges that go bust like FTX recently. All those factors have an impact on price. But most of those factors are random events. The Russia war, who could have predicted it? The mining ban of Russia or of China in 2021, who could have predicted that? Those can't be modeled. What we are looking for in models is the bigger structural factors that play a role in the valuation.
The distinction between value and price is emphasized in Plan B. While many people confuse the two, value refers to an asset's intrinsic worth, whereas price is controlled by supply and demand. The valuation models are concerned with assessing the value of Bitcoin based on a variety of factors rather than predicting its exact price. Plan B also handles certain people's emotional reactions to the stock-to-flow model, particularly when Bitcoin's price deviates from the model's projections. He emphasizes that all models have limits and that past performance does not ensure future accuracy. Emotive prejudices individuals' perceptions of the model's effectiveness may be influenced. He recommends using valuation algorithms to determine whether Bitcoin is over or undervalued at any given time. If Bitcoin is undervalued in comparison to the models, it may be a good moment to buy, but overvaluation may signify caution. While the models have a pretty high goodness of fit, 97 for the time, stock-to-flow, and UTSO models, and 94 for the difficult model, they are still simplifications of reality. The link between causes and Bitcoin price is not causality, and the events are random. Price changes may be influenced in an unpredictable manner. Even long-dormant Bitcoin whales can't sit quietly with Bitcoin predictions flying around. After years of lethargy, many large investors with millions of dollars in Bitcoin transferred their holdings last week. On July 22, wallets from 2011, each containing 10 Bitcoin worth $292,767 at the time of writing, relocated their holdings to different locations. After 12 years of activity, a wallet holding 5 Bitcoin $146,383 budged the next day. Then, for the first time since 2012, Bitcoin moved around $30.3 million in digital gold, or 1037, after his owner deposited it in a new wallet. The cryptocurrency was priced at 4.92 cents per coin at the time. Finally, on July 24, a wallet from 2010 transferred a substantial 50 Bitcoin, or $1.4 million. Bitcoin whales are investors who hold large sums of Bitcoin, at least 1,000 Bitcoin, and do not touch it for years, amassing astronomical profits. Such investors have shown to be more successful than short-term traders who purchase and sell Bitcoin. The asset is extremely volatile in the near term, but over the last 10 years it has risen from less than 95 cents per coin to 29,203 cents, a 30,700% increase. Whales have certainly been on the move this year. In a Monday study, blockchain data firm Glassnodes stated that there has been a substantial spike in recent months and that summer whales have been shifting holdings to exchanges, which is usually the easiest way to cash out or shift holdings to other digital assets. Although it is unclear whether these whales are individuals or corporations, Dr. Carol Kratoff, a developer of tools for automated trading and blockchain analysis, recently told Decrypt that these transactions could indicate commercial entities purchasing Bitcoin from individuals. In other news, WorldCoin, the crypto project created by OpenAI, Sam Altman, is being probed for suspicious practices by French data protection agency CNI, the regulator told CoinDesk. The legality of this data collecting, as well as the conditions for the maintenance of biometric data, appear to be questionable, according to a NIL spokesman in a written statement, alluding to WorldCoin's practice of scanning income to verify that no single person can receive crypto prizes twice. WorldCoin went live on Monday, and its supporters claim it has the potential to spread cryptocurrency further than Bitcoin. However, it has drawn the ire of privacy watchdogs in the UK, where the Information Commissioner's Office has warned that people must freely give consent to the processing of their data and be able to withdraw it without penalty. According to a Blockworks newsletter that investigates the difficulties surrounding the World Currency Project, WorldCoin will require a massive database of iris data, but not everyone is eager to peer into an orb. During the bootstrapping phase, you had to pay people to scan their eyes, thus WorldCoin went to the global south, home of the cheapest eyeballs, and played a dark game of what people will do for money. Surprisingly, WorldCoin was unprepared for an obvious result of this deployment approach, a black market for verified credentials, where you can ask for a world eye for as little as $30. Anyone with more than $30 can then command multiple digital identities. Despite the fact that WorldCoin is aware of the problem and has provided measures to remedy it. Connecting real individuals to digital identities is a phony challenge that WorldCoin does not solve and is unlikely to ever solve, since methane in the design prevents skilled civil attackers from farming eyeballs on the ground level through unethical tactics. It was also mentioned that WorldCoin co-founder Sam Altman is also a leader in OpenAI. If Fern is currently being sued for allegedly questionable usage of massive datasets, ask more questions than it answers. What are your thoughts on the WorldCoin project? Would you be willing to have your iris scanned in exchange for some coins? Let us know what you think in the comments box below, and don't forget to like, subscribe, and turn on alerts. Thank you for taking the time to watch.